Not everyone has hundreds of thousands of dollars, of course, just sitting in their retirement account ready to buy real estate. But that doesn't mean that real estate investing is off the table for those that maybe have a smaller amount of money in a self-directed IRA. So what if I told you that you could use just a few $1,000s to start generating tax-free rental income without even owning the property? So being able to control the real estate and the income without the actual ownership. That's exactly what one investor did here at Equity Trust, utilizing a master lease agreement in their self-directed Roth IRA. In this episode of Getting Real, we're going to break down how a small IRA balance could potentially be turned into a consistent stream of rental income and how investors can utilize creative financing strategies to actually build wealth all tax-free. Hi everybody, I'm John Bowens here at Equity Trust Company. If you haven't already, make sure to subscribe to the YouTube channel here and hit the bell icon so we can alert you to all of our upcoming content. Let's get started. In this example, our client decided to remain anonymous, so for the purpose of this, we're going to call her Lisa. Lisa was looking for a way to grow her retirement savings, but she only had a small amount of money in her Roth IRA to get started with. So instead of waiting years to save up enough money to use the Roth IRA as a down payment, she identified a technique that was suitable for her Roth IRA. This is called a master lease agreement. And it's a setup where an investor leases a property from a landlord and then subleases it to a tenant for profit. So she found a landlord who was tired of managing properties and managing tenants and instead was looking for monthly cash flow and didn't want to sell the property. So it was a perfect arrangement for Lisa, who was looking for monthly cash flow but didn't want to own property, and this particular landlord who wanted to remain the property owner and didn't want to deal with the tenants and the property management. So Lisa's self-directed Roth IRA funded the transaction, investing approximately $22,800. So this included the security deposit, the monthly rent, and it also included some furnishings because this was a furnished rental property where she was then renting it to a mid-term tenant, somebody that was going to stay there for between 3 to 6 months at any one given time. Her monthly rental income back into her Roth IRA is between $2,600 and $2,800. So the difference between what she's paying the landlord and what she's bringing in is her profit. So let's take a look at that. Again, she invested approximately $22,800. In the first year, she brought in gross rents of $31,200. So that's a profit of $8,400. So you can do the math on the cash-on-cash return on investment. That's nearly a 50% cash-on-cash return on investment. And then in year 2, she made profits of $15,200. So on an annual basis, she's profiting around $15,200 that flows back into her Roth IRA 100% tax-free. So now let's go over 4 creative ways that investors can consider utilizing their self-directed IRAs to invest in real estate without a large amount of money to get started. So the first is the master lease agreement, which is exactly what we talked about with Lisa. So a master lease agreement allows you to control a rental property without having to actually buy it. Instead of purchasing, you're leasing the property and then subleasing to a tenant for a profit. So why does this work? Well, see, many landlords, they don't want to deal with tenants anymore, especially folks that might be getting a little bit older, but they want the steady cash flow. So with a Roth IRA, like in the case of Lisa, the Roth IRA can lease the property. The Roth IRA pays for the monthly rental. The Roth IRA pays for all of the furnishings, and then all of the lease income will flow back into the Roth IRA. Now, Lisa is overseeing the transaction from an administrative perspective. But then in terms of the actual physical work, Lisa has hired other people to do that work because, of course, if she were to try to do the work herself, she could end up violating the prohibited transaction rules. So the potential key benefit here, that is, you can potentially start generating rental income inside of your IRA, or in this case like Lisa, Roth IRA, without actually needing a down payment and owning the property or taking on debt in order to acquire real estate. It's a way, as you can see, for small balance IRA holders to get exposure to real estate without the large upfront investment. Now, just to make sure, you have to follow the IRS guidelines and you can't do the work yourself on the property. The second option is partnering your IRA with other investors. So let's say you don't have enough money in your IRA, but you have an investor friend that has cash, might be in their IRA or outside of their IRA, and they're going to partner with your IRA to acquire a property. That might be a rental property or a fix and flip type transaction. Let's just give you a quick, simple example. Let's say we have two investors, one being your IRA and the other being another investor. And you're going to buy a rental property for $100,000. So you bring your IRA in with $50,000 and then their IRA or non-IRA funds in with $50,000. And let's just say for the purposes of this example that you're going to split the profits 50-50. You sell the property for, let's say, $200,000, and now the profits are split 50% to your IRA, 50% to that other investor. Now, you may also find some individuals can structure a transaction where they partner with another investor and they take a larger percentage of the profits. Now, you do have to keep in mind that you wouldn't be able to do this if you partner with yourself or your spouse or your children or other individuals considered disqualified persons under Internal Revenue Code 4975. Number 3 is generating passive income through private lending with your self-directed IRAs, or maybe you're even partnering multiple accounts to make loans to real estate investors. So how does this work? Well, simply put, this is where your self-directed IRA or IRAs will hold a promissory note and a mortgage or deed of trust. The mortgage or deed of trust, of course, would be the evidence of the debt. So rather than your IRA taking title to property, rather than you managing tenants or overseeing the rehab of a property, your self-directed IRA or possibly multiple accounts are lending money secured by real estate to other investors who are maybe doing a fix and flip, or maybe it's a buy, renovate, rent, refinance, repeat transaction, or other type of real estate asset. Number 4 would be real estate lease options, or potentially buying a property on seller financing or contract for deed. So rather than your IRA buying a property outright, if there's a motivated seller that's willing to sell the property to your IRA on terms, whether that's through a lease option to purchase, seller financing, or contract for deed, that's another option where your IRA makes a down payment, your IRA makes monthly payments, whether those are lease option payments or actual mortgage payments, and then let's say you rent the property out and all of the income flows back into your Roth IRA. So for some investors that are starting with a smaller amount of money, they look to some of these creative financing mechanisms like a lease option to purchase, contract for deed, or seller finance arrangement, which all can be done in your self-directed Roth IRA, HSA, solo 401k, or other tax-advantaged account. So as you can see, real estate investing within a self-directed IRA can go way beyond just a traditional buy and hold or fix and flip type arrangement. We talked about Lisa, who utilized a master lease agreement. So she only had a small amount of money in her Roth IRA, but she found an opportunity that was suitable for the amount of money she had in that particular account. We talked about lease option to purchase, land contract, seller financing. We talked about utilizing the self-directed IRA to make private money loans, and then of course, partnering with other investors through a real estate joint venture. So if you're ready to explore more creative ways to invest with a small balance IRA, you're going to want to check out our Small Dollar IRA Accelerator course. In fact, you'll see within the description section that we have a promo code, Getting Real, for 25% off this course. Until our next one, keep leveraging compounding interest in the absence of taxation. Thanks for watching. If you enjoyed this video, don't forget to hit the subscribe button right here so you never miss out on new content. And if you're ready to dive deeper, check out our other videos and resources right here.